How did economists get it so wrong in 2022? And which economists actually predicted 2022 correctly? As well as what is this economist now predicting for 2023? That's exactly what we're going to cover today, step by step. So keep watching. A year ago, economists at 3 of the 4 major banks in the country made a prediction that the housing market would continue to increase in 2022, though at a slower rate. However, they weren't able to accurately forecast the market, as this prediction did not come to pass. It was widely expected that the rate of housing price growth would slow down, as prices had risen significantly by over 22% in 2021 due to record low mortgage rates. However, few economists predicted that house prices would experience the largest drop since the global financial crisis in 2022. If you find value in these videos, it'd be greatly appreciated if you could hit that subscribe button to keep up to date with all things property and finance. According to the end of year data released by CoreLogic's National Home Value Index, national dwelling values decreased by 5.3% in 2022 and 8% from their peak in April. The combined capital cities saw even steeper declines, with values dropping by 6.9% and 8.6% from their peak. Sydney had the most significant drop with 12.1% correction, bringing the city's median home value to just over $1 million. Melbourne home values also decreased by 8.1% year to date, ending the year on track to ease all of the gains that was made during the COVID period. None of the major bank economists predicted the decline in home values, which left some recent home buyers with negative equity and others at risk of selling their homes at a loss. Westpac, which is led by Chief Economist Bill Evans, predicted an 8% increase in 2022. ANZ forecast a 6% rise, and Commonwealth Bank even predicted a 7% increase. NAB's chief economist was somewhat an outlier, forecasting at the beginning of February that house prices would remain unchanged by the end of the year. Even then, he didn't anticipate the significant correction that occurred. It wasn't only the major banks that predicted further price growth for 2022. Even HSBC's chief economist predicted that there'd be a 5 to 9% growth nationally in 2022. AMP Capital's Shane Oliver predicted a 5% gain, despite a warning in January 22 that storm clouds are gathering for the property boom. Dr. Oliver anticipated that house prices would begin to decline at some point later in 22, followed by a 5 to 10% drop in 2023. Most economists anticipated at the beginning of 2022 that house prices would increase modestly over the year, but that a significant correction wouldn't occur until 2023, when the Reserve Bank was expected to begin to increase interest rates. Many of these economists may have still been considering the statement from the Reserve Bank Governor Philip Lowe at the Financial Review Banking Summit in March 2021, when he reassured that there was very little chance that the cash rate is very likely to remain at the current level, which was 0.1% at the time, until at least 2024. Unfortunately, that didn't happen, and in November 2022, Dr. Lowe apologized for the misleading remark, which encouraged Australians to take out mortgages and buy homes that are now struggling to pay off. For example, if you took out a mortgage on a variable rate of $500,000, that loan now requires an additional $800 per month in repayments compared to what it was in April of last year. It's worth noting that there was also little indication that the Reserve Bank of Australia would embark on the most aggressive cycle of interest rate increases in over 30 years, raising the cash rate by 3% in just 8 months. This unexpected development likely made it difficult for economists to accurately forecast the housing market. Lewis Christopher was one of the few housing market analysts to accurately predict the possibility that house prices would decline in both Sydney and Melbourne in 2022. Its 2022 Housing Boom Bust report, it forecasted that Melbourne house prices could fall up to 3% and Sydney by 2%. SQM also correctly forecast that CPI would accelerate to 6% or more. So where will house prices go in 2023? The answer largely depends on what happens with interest rate. According to a new report from property analyst firm SQM Research, Australian house prices will increase in 2023 if the Reserve Bank pause interest rate increases and inflation decreases. SQM Research's Housing Boom Bust report for 2023 predicts that capital city prices will increase by 3 to 7%. According to the report's base case forecast, these prices are dependent on the Reserve Bank not raising the cash rate above 4%, inflation decreasing to 5%, and unemployment remaining below 5%. SQM's managing director, Lewis Christopher, stated that if the cash rate target stays below 4%, then it's unlikely that we'll have a flood of forced sales in the housing market. According to the report's base case scenario, Sydney is expected to see the largest increase in property values ranging from 5 to 9%. Mr. Christopher attributed the anticipated recovery in Sydney house market to overseas migration, a return to office work, and a shortage of rental housing. And the New South Wales government changed the stamp duty and land tax. SQM Research predicts that Perth's housing market will also increase by up to 8%, which will be driven by strong growth in employment and interstate migration. Melbourne and Brisbane are expected to see slower growth of 1 to 5%. Adelaide's housing market may remain flat or even increase by up to 5%. In Hobart, property values may decline by up to 1% or increase by 3%. In Canberra, property values could drop by 3% or rise up to 2%. Darwin is expected to be the weakest housing market, with SQM forecasting a 5% decline. The Boom Bust report also includes 3 additional scenarios for the nation's housing market in 2023. Under the report's best case or Goldilocks scenario, all capital cities except Darwin and Canberra would see a rise in property values, with a combined average increase of 5 to 9%. Sydney and Perth would see double-digit increases. In the report's false dawn scenario, we'd see only Perth and Brisbane avoid declines in property values, with the combined capital cities average remaining at a flat 4%. This forecast is based on the cash rate rising above 5% in the second half of 2023, inflation accelerating towards 10%, and unemployment remaining under 5%. The Big Four banks are less optimistic about the property market in 2023. Westpac forecasts that the cash rate will peak at 3.85% in May 2023, but it doesn't expect the housing market to recover until 2024. Westpac senior economist said that heading into 2023, the near-term outlook remains bleak. The downturn has become more firmly entrenched in most markets, while price improvements in affordability are being negated by interest rates and deteriorating expectations of prices and labor market. Overall, it looks to us like we have another 12 months of price declines ahead, but they're likely to be at a milder pace than we've seen in 2022. NAB expects combined capital cities to decline in 2023. ANZ also expects the housing market to fall. Commonwealth Bank of Australia has the most positive outlook of the major banks, predicting that house prices will continue to decline until mid-2023. These forecasts are conditional on the peak of the cash rate at 3.1%. Commonwealth is expected to be reached by the Reserve Bank's next meeting in February 2023. What do you think is going to happen to the housing market in 2023? We'd love to know your thoughts. Leave a comment below. And did you know, here at Hunter Galloway, we're mortgage brokers that deal with people Australia-wide. If you're looking to buy a home, an investment property, or even refinance, we can help. And best of all, there's no cost for our service. So if you're looking for a mortgage broker, get in touch with us at huntergalloway.com.au, fill in our contact form, or call us on 1300 088 065, and we'll see you next time.